Did you know that you can finance the buyer agent compensation into the loan amount or the purchase price? So here are some examples of what the options that a buyer will face with the new changes starting on the 17th. So if we, there certainly will be some sellers that uh, could likely continue to pay the buyer agent commission in full the way we've been used to. So in that case, a 20% down borrower on a $600,000 home with 20% down would have a principal and interest payment of about $3,033 and need about $124,000 at closing. Okay, if the seller chooses to pay no buyer agent compensation, then that let's assume the number is 3% for easy math for me. Then the buyer is going to be faced with, again, same purchase price, loan amount, and payment, but the cash due at closing, if it is 3% or $18,000 on a $600,000 purchase price, the amount they need the day of closing is going to go up about $18,000. So there's a couple solutions to bring that cash at closing down. And so I wanted to review them with you. One is we can add the compensation to the purchase price. So if there's no concern about the home appraising at a slightly higher purchase price or value, then what you can do is offer 618,000. So would be this scenario for a seller who's not willing to net anything less than 600,000. So you can offer $618,000. Of course, you end up borrowing more when you do that. So you're financing the commission into the purchase price and into the loan. The payment goes up about $90 or so, and that's because, of course, you're borrowing a little bit more. And the amount due at closing, we can see, goes up $3,000, and that's just because you're putting down 20% on a now higher purchase price of $618,000 instead of $600,000. The fourth option is that you can add the compensation to the loan. Now, another way of saying this is that the buyer can choose to put down that much less in down payment. So in this case, if it's a $600,000 purchase price, the buyer can, instead of financing $480,000, they can choose to finance $498,000. Okay, now 498,000 into 600 means it's no longer an 80% loan to value, which means the client will have mortgage insurance on the loan. With good credit in a scenario like this, that mortgage insurance should be about $40 to $45 per month. Okay, so you're borrowing more, you're adding some mortgage insurance, so the payment does go up about $160 from column one here, but the cash due at closing remains right in line. There's no other fees that the buyers can be responsible for in a situation like that. Very similar to how we were able to, adjust for appraisal gaps and things like that. So if you have any questions, please reach out. This is something that I'll be reviewing with buyers as they are reaching out to me on the weekends looking to make offers. So anything I can do to help, I'm always here. We'll talk to you soon. Bye-bye.